Now, well, everything I'm telling you now relates to actual production from shale comes from our report, Drill Baby Drill, authored by David Hughes, who's a petroleum geologist whose career was working in government, the government of Canada, the Canadian Geological Survey, where he did these kinds of large-scale meta-analyses of resources, exploration, and production. So he's highly qualified to do this study, and it's the largest study that's been done so far using an industry database, proprietary industry database. We paid for access to that data on all of the currently producing shale gas and tight oil wells in North America. It's completely transparent. And as far as we know, this is the best analysis that's been done to date. Now, we're not the only ones to do this kind of analysis. Art Berman, who's a petroleum geologist in Texas, has also published extensively. Tad Patzek, who teaches petroleum geology at the University of Texas, has recently published a more theoretical picture of this data in the Proceedings from the National Academy of Sciences. So this is not some kind of rogue claim from outside the realm of science and good data. This analysis emerges from the best data that are available. Okay, so what do the data tell us? They tell us that in each of these shale gas and tight oil plays, as I said, there's only a small area that's actually productive. This picture is of the Barnett Shale around Fort Worth, Texas, and as you can see, a lot of wells have been drilled. Thousands of wells have been drilled, but only in those black wells that you see are the only ones that are actually very productive or profitable. Most of the wells that are producing shale gas, all the red ones that you see there, are basically losing money for the industry. Oops, let me go back here. Once you get outside the core areas, initial production rates are lower and production declines very rapidly, upwards of 60% in the first year. So you drill a well in January, and by December, production from that well has already fallen by 60, 70, maybe 80%. That means you have to drill and drill and drill just to keep production steady. That's why we called our report Drill Baby Drill, because that's what we're going to be doing if we try to maintain this current level of production of shale gas and tight oil for very many years. But there are only so many good places to drill. So here's the problem from the standpoint of the industry. If all you have are these small core areas, they get drilled out pretty quickly. This has already happened to most of the shale gas plays. Really only one, the Marcellus in Pennsylvania, West Virginia, is still seeing growing rates of production. And right now it's more than offsetting declines in production from the older and earlier shale gas plays like the Haynesville in Arkansas in Texas, and the Barnett in more central Texas. So looking, for example, at the shale oil picture, claims are being made again that the U.S. is going to be the next Saudi Arabia. But if you do the math, look at the number of available drilling sites and the rate of decline per well declines in production, the math tells you that production is going to peak around 2017. That's 4 years from now, 3 years from now, and decline rapidly. So this is a bubble. It's a flash in the pan. It's a momentary boom, but it's not a sustainable long-term shift in America's energy picture. And unfortunately, that's what it's being sold as. Now, the New York Times has done some good investigative work on this. Back in 2011, they released a trove of documents from government and industry showing that insiders in both industry and government have very serious doubts about the shale bubble. And if you can go on New York Times website and root around there and find amazing things. But all of this was released back in 2011. The claims are still being made, and they're still being accepted at face value by government planning agencies, corporations, and people who read government statistics, because the U.S. Energy Information Administration, the EIA, is still publishing ludicrously overly optimistic assessments of shale gas and tight oil for the future, assessments that lack credibility. Now, it's amazing to use that phrase with regard to these kinds of government statistics that are apparently science-based, but so I don't say it lightly, but the EIA's assessments lack credibility. And in both drill baby drill and also snake oil, there's abundant reference for that statement. I'm not going to talk about the environmental impacts. You all who are on the line probably are already well schooled in those, but I will say that these environmental impacts are increasingly being documented despite the efforts of industry to suppress information, as for example by requiring when payouts are made to individuals as a result of health impacts or environmental impacts, they're almost always, or always in all instances that I know of, there's a non-disclosure clause so that people can't talk about what's happening to them. And then, of course, the industry says, well, there's no documented evidence of any environmental or health impacts. Well, sure, that's why nobody can talk about it. So why is it important to be able to discuss the economics of fracking in addition to the environmental problems? Because it's kind of human nature. People want to believe that the U.S. now has this energy bonanza, that our energy problems are solved. People are desperate for some good news, and this, to many people, this appears to be good news. So, they don't want to give up that good news, which is what basically if we take climate change seriously, if we take seriously the evidence of environmental harms from fracking, then we'd be trading away this abundance of energy and all of the jobs and economic benefits, the tax revenues to federal and state governments and local governments from fracking. We would trade all of that away on the basis of these environmental concerns. Most people would say, well, hang on, yeah, those are valid concerns, but let's get some economic growth here, and maybe we'll use shale gas as a transition fuel, for the next few decades while we figure out what else to do. But the point of the data that we're talking about here is that shale gas doesn't work as a transition fuel. It's a gangplank. It doesn't lead us anywhere because it's not going to be available for decades and decades. We're going to see a peak in production within this decade, and probably pretty rapid decline as a result of the extreme decline rates on a per well basis and the relative paucity of drilling sites. So all that shale gas and tight oil are able to do for us is provide a short-term boom that where there are really only a few real winners. And if more people understood that, then the environmental arguments would actually have more teeth, because if we take the climate and environmental impact seriously, then and scale back our reliance on fossil fuels, we're not really turning our back on any great economic boon. We're simply doing the rational thing, which is to reduce our reliance on these fuels as quickly as possible. The biggest trend in the fossil fuel industry is declining returns on investments, return on monetary investments and return on energy investments. The fossil fuel industry is taking up more and more space in the energy investment world. There's only so much energy investment capital out there. And the fossil fuel industry is moving from like 5% of total GDP in the direction of 10% of GDP. It's sucking all the oxygen out of the room in terms of available energy investment capital. And if that trend continues, it's, you know, we will have shut off all the exits. That's kind of the worst case scenario. The best thing we can do is shift investment toward the energy sources of the future, renewable energy sources now, while we can, while the energy investment capital is available. The more we lock ourselves into fossil fuels, the more difficult the transition becomes. So I haven't been keeping track of time, but I'm sure I'm over time. I should just probably wind it up here and hand it over to Deborah.